Welcome to Lesson 3 of Module 6. Today, we're going to talk about a crucial and transformative topic, the role of cryptocurrencies in financial inclusion. If you've heard about the revolutionary potential of blockchain, today you'll understand how this technology can go beyond investments and quick profits. It is, in fact, a powerful tool for social change, capable of empowering communities and bringing opportunities to billions of people who, today, are still excluded from the traditional financial system. So, why is this important? Imagine living without access to a bank account, credit, or insurance. Unfortunately, this is the reality for a large portion of the world's population. Financial exclusion limits economic growth, perpetuates poverty, and widens social inequalities. Today, we'll look at how cryptocurrencies can help change this reality. First, let's understand what financial exclusion means. It refers to the lack of access to basic services, such as bank accounts, loans, insurance, and investment opportunities. This problem mainly affects low-income people, rural residents, and marginalized populations, who are often ignored by the traditional financial system. The consequence is clear. These people are vulnerable to economic crises and have fewer opportunities to improve their lives. Now, where does cryptocurrency fit into this? With its decentralized nature, cryptocurrencies are accessible to anyone with a smartphone and an internet connection. This means that even in areas without banking infrastructure, people can transfer and receive money, save, and even invest, all directly and securely. Another important point is the cost of transactions. Cryptocurrency transfers, especially international ones, are generally cheaper and faster than traditional methods. This is a big advantage for immigrants who send money to their families, for example, reducing the costs and time of transfers. Furthermore, transparency is one of the great advantages of blockchain. Every recorded transaction is public and immutable, reducing the risk of fraud and increasing user security. This helps build trust, especially for those who have always been wary of financial institutions. Below, we'll look at some examples of projects that are using cryptocurrencies to promote financial inclusion. One such example is BitPesa, an African platform that facilitates remittances and payments with Bitcoin, reducing transaction costs and increasing accessibility. Another example is Banshu, which creates digital identities for people without bank accounts, allowing them to build a credit history and access financial services. Of course, there are challenges to widespread adoption of cryptocurrencies. A lack of financial literacy is still a barrier. Many people do not understand the benefits and risks of cryptocurrencies. Access to smartphones and the internet is also limited in some regions, and there is also the issue of regulation, which varies greatly between countries. The volatility of cryptocurrencies can also make it difficult to accept them as a means of payment. But with the right education, infrastructure, and regulation, the potential is immense. Cryptocurrencies have the power to transform the financial system, making it more inclusive, transparent, and accessible. So, if you want to understand more about the future of finance and explore the opportunities of cryptocurrencies, stay with us on our free course, Practical Guide to Investing in Cryptocurrencies, From Zero to Confidence in the Digital Market. If you liked this content, leave a like, subscribe to the channel, and activate the bell so you don't miss the next classes. The course link is in the video description.
See you next time.